I'm Graham Bibby, Chief Investment Officer. I'm joined today by Andy Koch from Kilara Natural Capital. We're here to talk about some interesting investments in the agricultural space, but first I'd like to give you a bit of background as to what Partners Private is. We've got a timeline of historical investments that we've been undertaking for our clients, and originally that's been in property, but we've added some other investments over time, including venture capital and private debt. And most recently, we're looking at agriculture and infrastructure. So why do we believe that private investments are good for our clients? Well, we believe that individual investors deserve better. We want to bring institutional quality assets to individuals, and those are wholesale clients. We've got a range of partnerships that we've had in the past, and you can see from our slide that we've got some of those that you can see that we've blended together with public market portfolios for clients to reduce volatility and improve their overall returns over time. So what is a wholesale offering? Well, it's an offering that's only available to wholesale clients as defined by the corporations law. And what we offer is low minimums that are available to clients across a range of asset classes. These can complement high-performing core portfolios that we also offer through Partners Wealth Group. What is our competitive advantage? Well, our competitive advantage is looking for typically middle market type opportunities, and that's assets that are in the area that are beyond the very small, but also they're not the very, very large that only very large investors and super funds and sovereign wealth funds invest in. We access these high quality middle market offers through funds that can take minimums of $100,000 or more. Sometimes that minimum can be 10 million for an institutional quality fund. So we're able to access some of those investments directly. And we've done to date, until recently, more than 21 investments. It's up to about 24 or 25 now. And we're looking for more across different asset classes. We'll just highlight one particular one that we did recently. Melbourne Airport, through Dexus, we created an access fund into that, which had a higher minimum, and we were able to access that for $100,000, sometimes less. And what that enabled us to do was get access to an investment that only an institution was able to access before. The returns on that, we believe, are going to be in the 10 to 15% area, but the information memorandum is conservatively pitched at 8.5 to 9.5%. We may have more of that style of investment available in the future, so watch this space. So, what are private markets? We look for assets across the spectrum of property, debt, private equity, and other asset classes, including agriculture and infrastructure. We typically want to see an 8% minimum, a strong track record, an attractive risk-adjusted return, and assets that aren't normally available in the market for less than 1 million. And we go through a rigorous due diligence procedure with our investment committee and a scoring process to assess those investments. And another reason why you should consider private market investments is that they help to smooth your portfolio return over time. For clients of ours, they've even outperformed the Harvard Endowment Fund and the Future Fund last year in 2022, where we saw a combination of rocky asset markets in equities and bonds producing negative returns. However, Harvard Endowment and the Future Fund have a range of private investments, and this meant that they were able to outperform markets that were down 20% in equities and even down 13% in fixed income. So even in that environment, we were able to put together a portfolio for a select number of clients, 50-50 listed and unlisted investments. And a particular client managed to do 8.65% last year. So really smoothing returns and increasing returns over the long run. Our things that we look for in private market investments are a little bit different to a super fund or other investors. Because we're playing in an area where we want to be a good partner for these infrastructure, private debt, agriculture, private equity, and property funds, we look for middle market investments. They're not as volatile as listed equities and publicly traded bonds. And we find that there's many ways to add further returns as well by consistently selecting better performing managers who tend to stay at the top quartile in private markets versus the volatility of active performance in public markets. middle market is a very common theme that we like in private markets. That's because you can sell those middle market assets to larger investors and make money off that as well. We like to select managers who have strong operational and development capability. They improve operational efficiency and they can find things at a wholesale cost as well. And so we also like to look at, well, what's cheap at the moment. So in downturns, there's opportunities to buy assets cheap or to look at allocating when other investors aren't playing in that area. So we'll start with some question and answers. So I've talked a fair bit, Andy, so perhaps we can talk to you about why agricultural investments, and maybe let's define what is the asset class for agriculture.
If we're going to define the asset class that we're really talking about today, we want to talk about real assets. So within the agricultural supply chain, you've got production assets, then past the farm gate you move into things like processing and infrastructure and packaging, right through to the downstream into the private food companies. So what Kilara Natural Capital specialises in is asset-backed opportunities in the production area of the supply chain. So things like the underlying assets, including land, water, infrastructure, and the actual products themselves, which is typically the crops. So that's the area that we focus in. A little bit about who actually owns the majority of this asset class in Australia. So using Australia as an example, progressively over the years, over the last 10 to 20 years, we've seen an increasingly competitive landscape in agriculture. Multi-generational family operators have always been there and really are the primary owners of Australian agriculture. But progressively what we've seen is the influence of institutions, foreign and Australian, coming into the market and seeking to acquire assets across a range of different sectors, whether that be in livestock, horticulture and broadacre cropping. But today, even today, we still see that the vast majority of assets in Australia are owned by private families. Those families have been farming that land for generations and they've got exceptional expertise, experience, track record, and have invested heavily in their own assets, aggregating them, developing them, and maximising the returns. So what we see now is a really interesting landscape where we've got two really large groups of owners of these assets in Australia competing to acquire and develop those assets. So if we look at sort of some of the strategies that are deployed by investors in agriculture in Australia, there's really, I guess, two categories or two different approaches. So for the larger institutional investors and the corporate fund managers who tend to focus on larger funds and larger deployments, they're generally focused on broader macroeconomic themes, a number of sectors that they look to deploy capital into. Much longer timeframes. They tend to be motivated by scale, so they tend to be running large allocations, big funds. They tend to operate with a lower cost of capital, and they're willing to forego income in the early years to really look at developing greenfields and development assets. Typically, those investors, which are obviously much larger, will tend to try and buy on market, which is a little more competitive. They will generally seek 100% ownership or controlling interest. By comparison, the Kilara Natural Capital approach is to look to tap into the expertise of the family operators. So our approach to market is really driven fundamentally by the investment returns on a set of assets that we've identified in partnership with some of the leading families who operate, whether that be in Australia or New Zealand. So our models, our deployment and investment models tend to run over about the 10-year timeframe, and we're certainly motivated by a different sort of risk-adjusted return profile around that 10 to 14% mark. The strategies that we would typically look to try and deploy across the portfolio is change of use, maximising the operating returns through use of technology and other systems and processes in conjunction with the operating partner that we're invested with. So Kilara Natural Capital funds will ultimately look to deploy in a more of a co-investment strategy, which would see our stake in the overall equity being around that 25 to 35%. And again, looking to try and benefit from the co-investment with these operating families. The question of why invest in agriculture, I'm sure that's front of mind for your investors, Graham. Look, in simple terms, the most compelling motivating factors for private investors looking at agriculture is the long-term capital preservation attributes of holding these assets over the 10 years. And it's not always 10 years, sometimes the cycles are shorter, but the opportunity to have an income-generating asset that they can hold for a long period of time that's generating a good yield is obviously compelling. The other interesting attribute that we find about agricultural investments in real assets is that they tend to be a really, really good inflation hedge. So as we see food prices currently being pushed up by inflation, you'll find that the food prices of the product tend to track with inflation. Other objectives and benefits from holding these types of assets, they increase diversification of portfolios. So people suddenly find that they've got an asset which sits in their portfolio over time and is not correlated to the ups and downs of equities markets and changes in the other asset classes, which I know would be an important factor in your design of the portfolios.
Maybe give us an idea of what are typical returns that you would expect in agriculture?
Sure. So, it's a broad category, but if you look at the long-term returns in agriculture in Australia and New Zealand would be very similar. And this blends all different sectors, so right through from livestock to broadacre. It's around 8.5% to 9% since 1990, and that would be a return that includes capital growth and income. We would suggest that a top tier operator and return should be sitting around that 10 to 14, maybe mid-teens result. By comparison to some of the other asset classes, that's actually reasonably strong performance, and that's what you would see. If you look at some of the other attributes in agriculture, you look at not only the horticulture sector, which we focus on, but things like water and some of the livestock assets, you'll see sort of those similar type returns, low teen returns.
And importantly, this is an integrated strategy that includes land, business, water, everything together, and the operating business.
Absolutely.
Yeah. So maybe, looking at the application of your approach, and you've got it here on this slide, but it'd be interesting to know how that then leads on to your selection of a particular industry.
Sure.
And an operator to execute on this. So
if you look at the number one factor that determines performance on an agricultural real asset investment, it's the operating capability that's looking after the asset on a daily basis, on a monthly basis. So looking at those family groups that have been transforming and developing and managing assets over a long period of time and the capabilities, Kilara Natural Capital's primary approach is to partner with those groups to develop strategies that we can then turn around to the markets and offer a product that gets these private investors access to these types of opportunities. Typically that takes a lot of work up front, but that's actually a really key point of difference with our approach. What we won't do is go on market and buy assets and then turn around and raise capital for them. That's not our approach. So we look at the operating partner capability first and foremost, then we look at the industry structure and the parameters, things like the risk profile, supply and demand fundamentals, etc. And then we actually go through a detailed due diligence process on the assets themselves. So that approach is very much focused on an investor first model rather than raising a serious amount of capital and then looking to deploy that over a series of years in some cases.
Yeah, before we go too much into further detail, some key facts about the fund would be good, and then some selected things about why the particular operator that you chose and the characteristics of the assets.
Yeah, so we've developed a fund that will hold a portfolio of assets. We're currently raising just over $10 million for the fund. The minimum investment of 250,000 Australian dollars, the target IRR of 10 to 14%. Really, really key feature of our fund is the income generating capacity of the portfolio. So over the first 5 years of our fund, we're projecting to produce an income of 5.5% and jumping up over years 6 to 10 to up to 10%. So we're very excited about the composition of the portfolio that the fund's ultimately going to own. It won't just own land-based assets, we'll also own shares in the industry marketing company called Zespri as well. So that's a key feature. So summarising the fund, we will be investing in 4 orchard assets, Zespri shares, and both SunGold and Ruby Red kiwi fruit in New Zealand. These are all the assets are located in one of the primary growing regions for kiwi fruit in New Zealand, in the Bay of Plenty. New Zealand kiwi fruit market is a global leader in its particular field. Has been growing steadily, progressively over the last 10 years on the back of the gold kiwi fruit product and the Ruby Red product being marketed very successfully globally. So we're really comfortable that both the fundamental structure of the industry and the growth of the industry gives investors a very solid base from which to invest into. The broader pipeline for Kilara in New Zealand is important. So this is essentially fund 1 of a series of funds that we'll be raising over the course of the next 2 to 3 years. It was important for us that when we developed this strategy in New Zealand that we also had a pipeline of opportunities that we could develop and offer to market progressively over the next few years. So you mentioned before Southern Cross Horticulture.
Yeah, so we like investments where you're selecting really great operators. And what stood out for you about Southern Cross and their ability to deliver better than industry performance?
Yeah, so SCH, we spent probably 6 months getting to know SCH and reviewing the assets and reviewing their performance. What was clear to us about the way the SCH go about their work is the investment that they place on not only the quality of the assets they're developing, the infrastructure they're putting in place, but the quality of the people that are involved. And as I said to you before, that a significant contributor to returns in agri-real assets is the operating partner. So it was absolutely critical for us that we invested heavily in understanding whether they actually had the right stuff or not. So we spent a lot of time literally in the orchards with them, understanding their approach, meeting the team. And what was clear about their performance was that not only on the assets that we're investing in, but a whole pipeline before we were involved, that they've done an incredible job on a continuous basis to essentially achieving a sort of a circa 20 to 25% premium on operating returns to the market. So any way you cut it, SCH are a market leader in this particular industry, and there's only a handful of families who you could really say stand out over in that market, and they're certainly one of them. So we're pretty excited to be not only investing in this fund with them, but others as well. An important point about SCH is they're around 25 to 30% of the equity in every project as well. So they're not only a really good developer, but they're actively involved from an investment point of view themselves.
And I guess about their background, they're a family operation as well, so there's a lot of consistency with owning agricultural assets and operating them over a long period of time.
They've been doing this for 45 years. They're a second generation farming family. They were ideal for us to partner with, and we're excited to bring our investors and supporters into that. One of the other attributes of our portfolio, which will be clear with the material, is that by investing in 4 separate orchards, 3 of them that developed and then the 1 greenfield project, over the first 5 years we will see these assets mature and be fully developed, and income streams will be maximised around year 5. So what you'll find is that as SCH does their job progressively over the first 5 years, the returns to the investors will increase, and by the time we get to sort of year 5, year 6, all these assets will be operating at full production.
And this is quite unique, isn't it, that you're able to put together a portfolio of producing and a development orchard in the one package, because an individual or other investors, they just can't access this package, can they?
One of the most difficult aspects of investing in agriculture for private investors is getting access to these types of funds. Your alternative is you go and do it yourself and go and buy your own farm and manage it yourself, which is not particularly palatable to a lot of investors. So what we've tried to do by design here, in conjunction with SCH, was develop access or negotiate access to this mix of assets for that exact reason. And so investors can feel very confident that due diligence has been done on these assets by us, obviously by an experienced partner, we've been through the process. Members of your team and so forth have been to visit the assets as well, and we're excited to bring this together.
And that due diligence is a combination of investment, financial, legal and operational due diligence. And one thing that we did for this is that we actually had an expert call as well, identified someone in the industry where we could cross-check a lot of the assumptions.
Yeah, well, a key unique attribute of the New Zealand kiwifruit market is the role of zespri. So zespri is a lot of people will see on the kiwifruit that they see in the retailers in Australia and everywhere else, they'll see the zespri brand. That's actually the single market index that represents the industry globally and responsible for really pushing the sales. So it is effectively acts like a monopoly. Zespri has an independent board. It's 100% owned by the growers in New Zealand. So the great and unique thing about the New Zealand kiwifruit industry is that growers don't compete with each other to outdo each other or to compete on price. Their number one objective is to grow really, really good quality kiwifruit and supply zespri. So zespri is constantly looking for ways to grow the industry, develop more sales, but also protect the industry through licensing programs and also really, really good biosecurity programs. You'll find that zespri will limit the amount of supply into the market by the licensing regime that they undertake. Now that's important for investors because those who've seen the supply and demand imperfections in other markets, that can't happen in this market because of the nature of the way that zespri controls supply. And
originally, the kiwifruit market in New Zealand did have that until zespri was formed really in collaboration with the growers. So other industries have that, don't they?
Well, I think the New Zealand kiwifruit market did two really important things. One is they went to China and got the actual Chinese gooseberry, which has now been rebranded to kiwifruit. And second of all, they had the foresight to create zespri in the late 80s, and that was a game changer for the industry because it meant they weren't competing with each other, they were actually collaborating with each other, and that's actually created a great opportunity. So if you reflect on all the attributes that we've tried to put together in this offering, not only have we pulled together some of what we believe is the highest quality kiwifruit orchards in New Zealand with the best operator within the industry run by zespri, we've blended together a really, really good mix of assets, a nice mix of Sungold and Ruby Red as well, which is in high demand from Asia. So excited about the offering.
So maybe, what are the next steps that investors should consider? What are the timelines, and what are the things that investors should do to maybe talk to their advisor, access the material?
Absolutely. So obviously the advisors have the materials. We've been through that process. Applications are required. So if any party's interested in either understanding more or accessing more information or Q&A, they can obviously go and speak to their advisor. Applications for the actual fund are due by the 11th of August. Funds committed by 23rd of August. There should be an IM available and an application form with your office, and we're available obviously to answer any questions.
And please come back to us with any questions and speak to your advisor. Thank you very much.
Thank you.
Thanks, Andy.
Cheers.